Good morning, everyone. How's everybody doing this morning? Hey, Ronan, how are you? Hey, Jam, what's up? How you doing? What's up, Jiraj? Morning, good morning. Hey, Rob Glenn, welcome to our stream. I'm JJ, vwaptrader1 on X, and this is the tradingsyndicate.org. And this is our New York opening stream where we prep you for the New York Open. Hey, Dan, Jag, Tilla, how are you? Good, good, good. Okay. Should we do some work? Hey, Kev. GoldenEye, how are you? Peter. Good, good. Salut, Robert. Ça va? Okay, so overnight inventory was long, then it got short. So we've had a nice rotation. Show you a few things here. This is where profile really helps because it becomes clear when you understand it. When we took out the Friday high, see that high right there? We took that out yesterday, and anybody who's trapped under that Friday high, they've been bid to cover on that afternoon pullback, and then even in early Globex. And right now we're stalled right there as well, right? So that 69.40 level, that's what we're watching on the open as we open. We did a look below and fail of yesterday's low. And that's the one trade I took. I took that trade actually for only 2 points, but I had 8 contracts on. So it worked out nicely. I did that right after the London session this morning, and it was just a quick trade. So now I'm looking for bids here. Do we hold this 40 or do we come back up? Now overnight inventory is kind of half and half. Hey AZS, how are you doing? You know, um, one sec. Hey Raj, what's up, brother? So I think we're going to go back and forth in yesterday's range. Hey Lear, and I think we might try that overnight low and see what's lurking. I want to see what bids are down here at 23. And of course, if we don't do that, we'll get rotation up. Now, the problem is this week, the order flow is not really reliable because not everybody's back at work yet. Right? Hey, teen, what's going on? People are just slowly starting to drift back into the offices. The market is in the hand of speculators. Let's make sure that we make good trading decisions and only take those trades that really are A plus setups. What's an A plus setup? It's not so much the trade, it's you. The A plus setup is how many times have you practiced this trade? Have you done your homework? Do you know what to do? Right? Okay. So the setup we want, the best setup there is the look below and fail. Look below and fail. That trade, it's done it. See, that was choppy look below and fail. So that's one type of look below and fail. And then here are 2 and 3, right? Your edge comes from how much practice you've put into the trade, Alexander, right? If it's an A plus setup, it means that you have practiced that trade 1,000 times over. You know it inside out. You've journaled it. You've done chart replay. You're like Mike Singletary from the 1985 Chicago Bears. That guy was one of the meanest linebackers around, but he was like a professor. He used to watch game film. So he knew where the running back would be before he got there, right? Your edge comes from the amount of work you put into the trade. Simple as that. An A plus setup is a setup that you have put the work into. That's when it becomes an A plus setup because you can talk about that trade. I could talk about the look below and fail for 8 hours. Different types, different variations of order flow, all of that stuff, right? So you're right, your edge comes from risk, but that's just one part of the puzzle, right? Sorry, one sec. Sorry, one second, folks. Okay. Your A plus is look below, not any level. No, no, not just any level. At the edge, Robert. So this is my balance level. This is a cost basis, right? Yeah, every trade should be an A plus setup. That's very good, Attila, right? So when the market comes to the bottom of a cost basis and re-enters it, that's when the sell orders that took the market under 40 have been completed. When they're completed, the market will rotate higher as inventory at 64.40.39 doesn't exist anymore. So that price is not available anymore. The market moves up. That's why you buy 41, you put your stop at that level, and then you sell into strength because you know there's going to be sellers at VWAP. Very simple, right? And every trade when you first start should be an A plus setup, right? That keeps you from taking trades that don't make sense. Every trade has to make business sense, right? Very simple. All right. So right now, if we opened right here, we'll be opening in yesterday's range, under the close, kind of in the cost basis, but at the lower part. Yeah, so when you're buying Montreal Trader, Robert, you want to buy at the edge. Hey, Badir, how you doing? Right? You want to wait for the absolute edge. So if I'm doing look below and fails, this is my edge here and this is my edge here, right? Once you understand that trade and you get skill, you can take that trade from different levels once you understand it. But the reason I tell you to just go from one color to another is, first of all, people can remember that, right? Blue to red, back to blue, right? Simple. But that gives you an edge because this is the edge of a zone. This is the edge of a zone, right? So think about it. This is where you're getting the deepest discount from here. You see? And if it breaks and goes down here, that's a very deep discount. So this is where your inventories is priced. This is minus 2 times. This is the discount zone. Very simple, right? It's got to be simple, right? That's why we do the same thing every day. We have the same procedure to look at a market every day, right? And we do the same thing. Okay? So here we seem to be in a bit of a rotation between 40 and 43 and a quarter. VWAP's above us, right? I think it's going to be a little choppy off the open. Okay? So let's make sure we let the market open and we test and see where the bids and offers are going to be. If you're already long, right? Say you're long 41, 42 against 40 and a quarter. Say you're long here, right? In this area, and you're using that candle low as a stop. You know that there's going to be sellers. There's sellers here at 43 and a quarter. You can see them. The next sellers are going to be here at 45 if you break VWAP. So now you can manage your expectations. You're not looking for a 30-point move because you know that there are sellers at 43. You know that there are sellers at 40, 45, and you know that there's going to be sellers here at 46 and 3/4. Does that make sense? So now you know already what to expect. Does that make sense? So a 4 times discount, wouldn't you like to get a 4 times discount? I know I do, Robert. I like deep discounts. Remember, how can you tell where the sellers are? Really simple until at the top of the candle, right? See when I draw these, I drew a line here. Do you see this? And I'm not BSing. I drew this line and you see how we came right back to that line and they sold at the same level. Now, how do I know this? Because all my life I have been the seller. So I know that if I'm a seller here and you come along and start competing with me, I'm going to lower the price that I'm selling to get rid of my goods before you take my customers. Does that make sense? The top of the candle are where the sellers initiate. And they will sell there before, again, when they get up there. Why? Because they are size traders. Now, my buddy Badir is working on some software that's going to help you guys trade size. And it's a very beautiful simulator that puts you in the driver's seat. Okay? It's really simple. And you don't need any special software, right? You know nothing, right? Now, for you, Robert, right now, 4 times. Just stick to 4 times. Don't worry about 3 or 1. As you gain skill, you're going to be able to take those 3 times 1 time, right? It sounds too simple. Thank you, Teen. It sounds too simple to believe, but it's true, right? Right? Trading is simple. It's been going on for thousands of years, right? The microchip, this screen-based trading, you know when this stuff really started to happen was after 1995. When Windows 95 came out, that started the software revolution for retail traders. Because Windows 3.1, the trading software was crap. So Windows 95 till now, exactly, just from one color to the next, Robert. Very simple, right? And we don't screw around in the middle, right? You don't diddle in the middle, right? So right here, for you, no trades. As you get more advanced, I will teach you more advanced subjects and more advanced trades. But you got to walk before you can run, right? This is very simple, very simple. It keeps you from taking bad trades. It keeps you from all of those bad things that people do because you're only doing business when the business is suitable for your level of skill. See, because unfortunately, and I'm no, what I say, I don't, I'm not speaking for, oh, this is what you guys do and I've never done this. I have done all of these mistakes. When I started retail trading, I literally sucked at it, right? I couldn't trade my way out of a wet paper bag. And I'm a market maker, and I put deals together and sold hundreds of millions of dollars worth of stock into the U.S. equity markets. Retail trading is very much different. It's a completely different business, right? So I had to learn this stuff, and I went through all of these, so-called trading mentors until I found the profile guys. They made sense. I saw that Jim had actually worked. He was, he was high up at UBS, and he managed a couple of $1 billion in the 80s, right? He was the director of floor operations, so I knew I could take him seriously, right? He wasn't like some guy who was on fries at McDonald's and teaching you how to trade next week on YouTube, right? So what he said was made sense. It brought me back to inventory, but it took me a long time to put this framework together to make it simple for you guys because unfortunately now, since Windows 95, right, all these years later, 30 years later, dear God, I can't believe it's been 30 years. Whew. 30 years later, you guys are overwhelmed with all this BS software. You've got book maps and bookworms and nose print charts and all of this crap that you guys are concentrating on, and you're missing the business because nobody can explain the business reason for a trade. When I talk to even seasoned traders, right? Oh, Mr. Simpson, don't make me mute you again. Please, can you behave today? Right? Right? That's why you're not making any money. You love crossovers and bookmap. That's why you're not profitable. Okay? So please, try and behave yourself. Just keep your mouth shut and try and learn something. Okay? I'm trying to be nice. Okay? So don't go and piss all over my stream. Got it? You've been warned once now. Okay? So, simplicity. Keep it simple. Right? Keep it simple. Right? You want to make money, keep it simple because you guys can't hold 10 things in your head and execute at the same time. So what are you looking for? You're looking for the offer. When the offer is moving higher, it means the sellers, right? The large sellers have seen buyers and they are raising price. Don't short that. So only short when you see that there's a seller and the offer is moving lower, then you have a place to put your stop. The business reason for the short is that you see sellers competing and pushing price lower, just like when Walmart and Costco compete, right? The price of the TV goes lower, okay? So that's when you short and you have a place to put your stop. If the trade goes this way and you're short, then the business reason for the trade is gone. If I go long here and I'm long at 41 and somebody offers the product for sale at 39, then I am holding inventory that is mispriced and I must exit before it does this and takes out all my capital. So if you have a trading mentor, if you're in a trading room, if you're listening to one of these guys, go and ask them what the business reason for the trade is. If they tell you it's random and they don't know and you just got to put on the trade, they're full of shit and they don't know what they're talking about. Right? Every trade, there's a mechanical business reason for that trade to work. Right? All of this crap you guys look at, volume analysis done by somebody who's never traded more than 1,000 shares of a $5 stock, that's bullshit. Right? Don't tie into that. Trading is simple. If I gave you a time in sales, would you be able to trade off it with no charts? And I know 99.999% of people who are on this stream would not be able to do it. That's how they traded for hundreds of years. And they didn't even have real-time quotes. So what I'm teaching you, I'm not teaching you a method. This is not the JJ method. This is how the business works. Right? There. See how they're raising price? Right? So the traders who are positioned long here will now start selling into this. And look, I told you there'd be a seller there. There they are. Look. Now, if we see more buyers under VWAP, they will raise price to the next area where they were selling. Otherwise, we're going to come back down under VWAP. Right? So I drew a line, a simple straight line, and the market went there to the penny, to the tick. Right? Everyone's got a candle chart. Everybody has the ability to draw a straight line. The real question is, can you pay attention? Right? Can you actually pay attention and focus? Because if you can, the world is your oyster. But if you're one of those people who's looking at 20 different things, trying to correlate markets, blah, 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 you're not going to be able to trade. Right? And I'm being real with you folks because it's a new year, right? And I don't want you guys to be wasting time. I'm only talking to you guys like this because I actually give a crap about whether you do well or not, right? I know what I'm doing. I'm trying to educate you guys. I don't have to explain myself because I've traded billions of shares of stock, right? And I've spent 10 years putting this together to explain it in a simple manner, right? See, the offer is moving higher because the sellers are seeing buyers, right? Don't overcomplicate it and don't bring crap into it, right? Trading is simple. You buy some cheap crap and you sell it at a higher price. Look it up. That's why they call it a market, right? Yeah, people are wanting a 100-point swing because they're suckers. It's not hard to change your state of mind. How many times have you had a 100-point trade? Be honest. Are you trading with a $10 million account and do you have the skill to manage a 100-point trade? I'm not making 100 points on a trade. That's not how professionals look at it. That's like walking into a casino not knowing how to play their crazy games and putting all your money on one thing, right? It's all singles, right? You know, if you could make a couple of $100 a day, it adds up. As you build skill, right? The problem is your ego is taking over your level of skill. You got to reverse it. You got to flip the switch, right? Your ego should not be driving your trading, right? Until you have skill, Take your ego and put it in a box. Because that's the problem with retail traders. I've made the same mistake. I thought, I'm a hotshot market maker. People fly me. People pay me insane amounts of money to work on their deals. Right? When I started retail trading, stop out, stop out, stop out. I'm like, crap. I suck at this. Right? My ego took a huge hit. We're looking for the stops at 47 and a quarter to get blown now. Right? There's our next seller. Here's Johnny. Look, we hit it to the tick. Seller, 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 seller. They're going to sell there again. So if you were long, say off VWAP, or if you were long under 43, sell a little bit. Right? Do you know I took a 2-point trade this morning with 8 contracts and I made $800. 2 points. Right? How many of you have made $800 trying to do a 1,000-point trade? You haven't. Right? It's really simple, folks. It's really simple. Right? It's time for you guys to smarten up. Yeah, unfortunately, no, I couldn't go back to bed. But that's what you should do. Make your 2 points, make your $500, your $800, and then go to the beach. Right? Because if you do it again tomorrow, it adds up. Just don't give it back. You know what I mean? Take what you can, give nothing back. If there's nothing there today, just chill out. There'll be better trading tomorrow. Right? All right, we're off. Off to the races. Enough preaching. Let's get down to beeswax here. So, next set of sellers is up here. Okay, so the bid is under 46. If you're long, if we stick the 49s, you're looking for 54. All right. Remember I said 49 to 54. We might have a little pit stop at 52 3/4. Right? If you're long, govern yourselves accordingly, my friends. Govern yourselves accordingly. Which means do good business. Right? So that bid, right? The bid has moved up. Right? So there's a seller at 52 3/4. The levels work. Right? The levels work. Now let's see if we hold 49. The position, the short-term position is underneath us. So if you're long here, right, there's going to be some sellers here. Let's see if it holds. Like I said, it's going to be choppy. Let it chop around. Let's go see if that A open and that low holds. Okay? If it doesn't hold, we'll come down and tag the close of yesterday. Right? What you need to do is if you don't understand what's going on, don't be upset. Because you're not supposed to be profitable at this right away. Right? It's not like you're a virtuoso on the piano. Right? So say you're long 50. I'm long 2 at 50.88. I sold one at 52 3/4, and I'm offered at 53. I didn't get taken, so I flattened the trade. Okay? If I had more contracts, if this candle holds, I could see that there's a seller here, and then there's another seller here. If that offer starts to lift, if I had more contracts, I'd offer them from sale at 54, right? Because there's a stop right here. This is where the size traders are going to sell into this buying, right? Their machines are automatically programmed to do so. Take short scalps, right? Now that's not an A+ setup, but I've been trading for 35 years, so I'm fast, right? You can be fast too the more you practice. Learn your software. Learn how to put orders in quickly, cancel them, put in stops quickly, right? You have to put in the work, right? You can't be, what do I do, right? Put in your buy order, put in your stop automatically before the buy order gets executed. As soon as that buy order gets executed, put your sell order out, right? So you can profit from your trade. Don't be sitting there hoping it goes higher, right? Map out your trades, right? Map out your trades. Why is the POC higher than the value area from yesterday? Because we're in distribution, Rob. We're taking the cheap crap from yesterday and we're selling it higher. It's a market, right? So now we're going to backfill that move higher. You take price up to generate interest. People come in. Then they lose interest. So you got to sell the market down. Now we're going to find the bid. So there's a bid at 50, right? We got down to 50 and the offer moved up. So the software that the sellers use, it senses the order flow. They saw buyers at 50. Let's see if they pay 51. Let's see if they pay 52, right? Now we got sellers up here. And if we take that stop, the next stop is going to be 55. So it'll be just right up here, right? If we blow that stop, it'll create some buy orders. And they're selling into it. When you take an upper stop, you create buying. That's why I don't buy breakouts. I sell into a breakout. How you do proper business is you have inventory here, and when it breaks out, you dump your inventory into the buying of the stupid people who are buying breakouts. Very simple. Right? Now the market's going to come back down. Let's see if that bid at 50 is still there. You guys understand what I'm talking about? If not, come join us at the Trading Syndicate. I'd love to teach you how to do this. I also do one-on-one lifetime coaching, right? Come check us out for a month, and I can promise you'll learn more in a month with me than you will 10 years anywhere else. Because we actually give you a way to make money. We don't blame it on, oh, it's random, right? If you think people put $1 billion to work in a random way, then you're kidding yourself. Oh, I make trading execution errors all the time, especially if I'm tired, if I have a cold. Uh, definitely, definitely, right? All of the errors you guys make, I make myself, right? That's a good question, right? And we could always go and put that in. Let's see what the AI says. I'm curious. Let's see what our AI says. Whoop. Let me just copy and paste. So we got some news coming, right? 9:45. Thanks, Lear. So we got news in what? 9 minutes? The bid's still there. You guys check this out. This is going to blow you away. I mean, it's absolutely amazing. So there's some buyers at 50. Now, when that news comes out in 6 minutes, let's see what they bring in. So the AI will ask you when you second guess. Is it pre-entry, after entry, on exits, right? So you can dig in with that, right? It's amazing, right? Especially if I'm asleep, I'm not around. I'm usually around. But the AI will take my answer and it'll go even more in depth. And it's not BS AI. It has actually been trained from people who know what they're doing. All right, here we go. Let's get. I think we're going to come and test this A low here, right? We've jammed all these people above 49. Let's see if we can get back to VWAP. That's the next test, right? So you'll notice that I'm not just trading randomly. I'm not just, oh, I'm long, I'm short, I'm long, I'm short. I don't do that, right? I think of the dollars in my account as bullets in a gun, and I'm not wasting them, right? So look, it's just chopping around here, right? A couple of more minutes till that news hits. I don't trade news, right? Because I don't have a $200,000 a month data feed. So I wait for the news to happen. I wait for people to get chopped up. Then I wait for my setup. Right, so there's a little bit of a look below and fail of 49, but I'm not buying it. I can see, do you see the tops of these candles? Right? Check this out. Seller, seller, seller. The sellers have been moving lower. That's why you guys get a trend line, right? I can't see anything on that data that's coming out. I don't care. What I care about is I want that data to come out. I want the market to react to it, and then I want to look for the trade. I do not trade gold. I have run gold mining companies. I've run mining deals. I've made markets in mining stocks for gold. We drilled in for gold in Alaska back in 2011, right? But I do not trade gold. I trade one thing and one thing well, right? I trade one thing and one thing well. On that 200K data feed, it's speed, Happy Go Leverage. You got to understand that large, massive partnerships, family offices, and hedge funds, they have access to faster data, faster execution algorithms, right? They spend millions on technology, right? So they have an edge that you don't have. That's why you should not trade news, because you're not fast enough, especially in the ES, right? So that's what I mean. I mean, don't try and trade a news event. Wait for it to pass. Let all the people who want to be heroes get blown up, and then take the trade when your setup arrives. Your setup are the terms and conditions under which you do business, right? So right now, if there was no news, right? Yeah, it's better than our $80 here, right? Could we see a movement down to yesterday's cost basis? Most certainly. It's the first week of the year, Michael. Anything can happen. And a lot of firms don't trade news. Smart money don't chase trades like dogs chasing a car. Okay? Everything is calculated. Every battle is won before it is fought. Okay? So they don't do crazy things. So this is a look below and fail of 46. And I would have gone long 47, but we got news coming out in 2 minutes, so I'm just going to wait. The setup is a business plan. We have a business plan, and we only execute when those terms and conditions are met. Right? So, listen. Have you guys ever pitched an investor? Have you ever sat down and asked a billionaire for money? Well, when you do, they look at you like you've got a disease. When you're giving a pitch, they're kind of like, ew, who are you? Right? So you want to be like that when you're looking at a trade. You don't want to just throw your money at any crappy trade that comes. Be a little bit of a snob, right? So when certain things happen, I will do my business. I will commit capital. If you cannot meet the terms and conditions of that, Mr. Market, I am not putting my money into you. Get it? Be a bit of a snob. Don't just throw your money at any pretty thing that comes along. I hope you guys get what I'm saying, right? So look below and fail. If you were long 46, there we know there's a seller at 49. There they are. They're right there. The line is drawn, right? And because it's a slow, choppy market, it might take some time to lift. There we got a bit of a lift, and we've got news in 40 seconds. So don't chase this price move. If you're long, I'd be selling into it because the news is going to come out in 28 seconds, and let's see if they bang it up or down. I have no idea what's going to happen. Do I care? Not really. We know that there's a stop at 55 and a quarter. If we blow that 55 and a quarter stop, your target's going to be 59, right? But I have no idea how the market's going to react to this news. So let's see. Seller at 52 and 3/4. So if you are long before the news, pay yourself, right? Might be a non-event too, right? Always sell into strength. If you are long 5 contracts at 49, sell some at 52, 53, 54, right? And if those orders, there you go. If those orders don't get taken out, then lower the price that you're willing to sell your product at, right? It's a simple business, right? Took one stop. Next stop's up here at 57. Overnight high is up here at 59. Let's see who comes into the store to buy now. See, they're starting to see how they sold into it, and now they caught a bid. It's a little choppy around that stop. Let's see. Can we take out the overnight high? It'd be kind of rude not to at least give it a try. Come on. Okay, we blew out that stop. Next target is the overnight high if you're long. How do you learn from your bad trades? Do you journal? Do you journal your trades? There we go. Journal your trades, Fernando. Come into our trading room. I'll teach you how to do it. Overnight highs taken. They're selling into it here. Now, I think, see the levels are working. 69.59 to the tick. Right? This is why cost basis works. Right? Because you don't want to buy something at double the price. That's where you're looking for a look above and fail of 59 if you're looking for a short. Let's see what happens when the next candle opens. Nope, no short yet. See, that's why you wait. You wait for it to look above and then fail. We are in the front end of this move up. You don't want to short that until the back end starts showing itself. Next set of stops is up here at 69.60 and a quarter. Yeah, we do, Raj. We got that gap in that 69, 68-ish area. Where the hell is it? It's up here somewhere. I've got it marked. There it is. So there is supply above us, right? Very simple stuff, ladies and gentlemen, right? So this looks like a look above and fail. So let's say you wanted to take a short here, right? You're selling this, your stop is 59, right? So if you're short 57, 56, put some buy orders in and see if you get filled, right? You should come back and backtest this 56. If we can't get to 56, the next candle is going to pop us and try and pop that 59 again, right? Make sense? This is the back end of the move. Now wait and see if the next candle takes out the top of that candle. If it doesn't, the sellers are competing. Look, right? So even if the trade goes bad, your risk is very light because then you know, right? If it gets over 59, you could scrub the trade. If there's no seller at that overnight high, you scrub the trade, right? Make sense? And that's why you use a stop, right? Stopped out, right? I was short 57 and 3/4, stop at 59 and 1/4, I got stopped out, right? It's simple logic, right? Now, am I having a big hissy fit because I got stopped out? No, right? The inventory's underneath us. It's a brand new year, right? So now I know where the bid is, right? Let's see if it pulls back. If it can't break 59, don't think about shorting it right now. Just chill out, right? So let's see. We're so close to yesterday's high. If we take out yesterday's high, we are going to run stops, right? If we get accepted above yesterday's high, there, it takes it out. So see, I was short 57 and 3/4. I got stopped out at 59 and 1/4, right, on one micro. But had I held on to it and added to it, I'd be way out of the money right now, right? The candle blew up out of nowhere. It was a big order. Somebody dropped a big order, right? That happens. That happens because anybody who was short under 52 realized, oh crap, we better cover. And they went and covered and we got two big candles. Very simple. Now we're going to come back and test that previous day high. If we hold the previous day high, you are looking for longs. You're looking for longs. Right? And you just trade level to level. Put your sell orders out because the order flow up here, as you get to that gap, there's going to be selling in the gap. There should be some resistance at 67 3/4. Now, if we fill the gap, we know the shorts are desperately trapped. Right? If we start seeing a lot of selling at 67 and they come down and bang it down, we'll get back under 63. Okay? See, watch. We're going to come down and test that 63 here. Yeah, there's no single prints here. They're from, is it, oh, are they from, oh, I see what you're talking about. Was it Christmas Eve? Okay, yeah. There are single prints, but they're to the upside from the 24th. And 24th wasn't a full trading day either, so. Right, yeah. But there's a seller at that gap. So we're back inside yesterday's range. Okay? So now let's see if we can bid the thing back up over 63. Right? Wait for the next candle and see if we can get some bids. Right? This could be a fail to look below 59. Give the next candle a shot and see whether, if those sellers, see the seller was here, then it moved down here, Now the next candle, if that next candle can't take out the top of that candle, we are going to rotate back down to 59. Make sense? Markets can't, they'll just go up and down. Hey, Mike, Happy New Year. How you doing? Right? A little bit of, see how it's struggling? It's a little slow here. So let them figure this out, right? It's the problem with this first week of the year. Not everybody's back at work. The order flow might not be that great, right? There might not be a lot of follow through. So that means you just trade a little less and make sure that you don't get too greedy on your trades, right? So say if I was long 62, I'd be selling 64 and 3/4, 64 and a half. I'll take 2.5 points on a couple of contracts. I don't mind, right? I would rather make $50 than lose 300, right? So you sell into strength, my friends. Sell into strength. Do not wait for the market to give you an invitation to sell. You have to be a smart business person, and you must sell into strength. Exactly, Robert. Exactly. Right? So, yeah. The perfect look below and fail, the A plus setup for us would have been when this candle came down, look below 59 and came back up. But it failed to take out 59, so I know that there are buy orders underneath there, right? So you could take a little bit of a long and sell into the strength because you know there are going to be sellers up here because the gap is here, right? So right? You know where the sellers are. So when you're long, you know where there's going to be competition. And guess what? If you know where the competition is when you're a seller, you'll become a much better short seller because you need to be able to spot selling to be a good short seller. That's why people fail when they're shorting because they're always shorting the front end of the move, right? I shorted the back end of the move and I got stopped out. So my risk was light. Now, if we completely run out of supply, we're going to go and we're going to take out that 68 stop and go up to 68 and 3/4. Let's see. There's that stop. It's the A high from the 29th, right? See how they sold into it? You knew that the low of that gap was 67 and 3/4. They sold at 67 half, right? Very, very, yeah, exactly. The gap down is resistance. There's supply sitting there. Yeah, it's good, Mike, to sit out and watch and then trade lightly, right? I'm not saying don't trade. I'm saying trade small size because it's a brand new year. So when you have a brand new year, you have a brand new agenda, right? You guys realize that agenda of the large smart money creates the order flow that you guys trade, right? Resistance because of trapped longs of the previous year. Exactly. And even if all the retail longs are gone, there's going to be some market maker inventory at that level. So think of that as a storeroom for contracts. If you run out of supply, you go up into that storeroom like we just did, and we eat through those single prints, right? So now that gap is filled. December was a tough trading month. Actually, the market has not been a cakewalk since after Thanksgiving. Really, after Thanksgiving, it got really kind of crappy, right? Year end is always hard to trade. November, December, because you've got a lot of competing order flow. You have people trying to mark up markets. You have tax loss. You got all sorts of crazy business things that are happening that you guys don't even think about. That affects the waves that you're trying to surf, right? So any of you surfers out there, sometimes you guys get nice smooth waves. Sometimes you get chop, which means, you get up and you get thrown off right away, right? Whatever analogy you want to use to make it real for you, right? Always don't be afraid to sit and watch a market before you put your money into it, okay? And then test it using a micro or two. So if you do have a bad trade, you lose 20 or 30 bucks. You can recover from 20 or 30 bucks, right? This is how smart money operates. They test things out, right? So like say, who makes Oreo cookies? Maybe they wanted to make a peanut butter Oreo cookie. They're not going to go and make it. They're going to go do some test marketing to see if people want to buy it. Then that's what you do in this. In any good business, you do some test marketing, right? You do some test trading to see whether or not you've got a great idea. You've got to run up the flagpole and see if anybody salutes, right? Right. There you go, S-Pill. The kooks. Take your time, my friends. Take your time. Right? Come to our room. Learn how to trade. We will teach you. Right? We will teach you. Don't worry. We got your back. Right? If you're with me, I will make sure that we keep you on that path to profitability. See, there you go. Raj, beautiful, right? You've made your money for the week. Nice. Love it, love it, love it. Beautiful. Double top, B period. Why stop now? We got a good thing going, right? They're coming in. They're coming into the store at Walmart looking for 71.5. Above 71.5, I've got a larger term level at 73.25. Okay, check this out, ladies and gentlemen. Trading is all about inventory and position. Right now, the inventory is here, price is here, the position is underneath us. So this is where we've loaded up the trucks with vegetables and we're taking them to the market to sell them, right? What does it mean if the price is business is slow, but the price keeps creeping up? Remember, Arcroy, how we spoke about on our call that those large traders are in charge? So they just keep inching the price up and people keep coming, right? See, all of the inventory for the last basically 2 weeks of December is underneath 69.63. My pleasure, Francois. Good to have you with us. I'm here every day at 7:30 in the morning UK time, which is 2:30 in the morning for people in New York who have insomnia. And then I do another session now at 2 p.m. UK time, which is a half hour before the New York Open. I'm here every day. And our trading room is tradingsyndicate.org. And my goal is to take regular, normal people and help them make a living in this business without all this nonsense that you hear about indicators and fraggles and divergence and bookworm and all that crap. We teach you common sense trading, right? Well, first we got to get past 73.25, S-Pill. On the road to 77. We can't go around it. So now let's see if the candles start getting small and we can't seem to get much higher right? But look at the bottom of these candles. Check it out. Lows are getting higher. That means the bid is following the offer. The green line is following the offer. As the offer moves up, the bid will follow it like a dog following somebody with treats, right? There you go. This slow, creepy price action is how they trap you short. Because you think it looks weak, you go and short it, 3 minutes later, it's 4 points higher. But you never see it coming, right? And that's the problem. That's the bad thing about algorithmic trading is because it's so frickin' precise, right? And that's why it's like playing possum. You go to short it because it feels weak, it looks weak, but the chart is telling you, hey, buddy, it's not weak. The lows are getting higher, right? Right? Now we got a seller at 71.5, right? Let's see if we can take out. Let's see if we can take out 68.25. See the bottom of those candles? That's where the last bid was. There's your 10 a.m. reversal for those of you who are really into it. Right? So if you're short here at 70, where's your stop? Right? It's 10 a.m. Do you know where your stops are? Your stop is here. Right? And your bids should be down here, because if these bids don't get filled, it's going to turn like an alligator and rip your face off this way. Right? Watch. So your stop will be at the top of this green candle, right here. You know there are buyers here. The bid is moved up. Check it out. The bid is moved from, give me this stupid thing. The bid is moved from those two candles to these two candles. See that? And your stop would still be here. Why would you risk more? Right? So if you were short, you could still be in the short as long as your stop doesn't get taken. Right? And you need it to come and break 68.5. Because if it can't break 68.5, even if it goes sideways for a couple of candles and it can't get lower, it's going to turn on you. Because unfortunately, higher prices and price stability suck buyers in. Right? It's just like when I ran a nightclub, I'd start the lineup at 9 o'clock. By 11 o'clock, there'd be 300 people standing in line. Look at that. See, I told you it would turn and it would stop you out. So there's 73.25. We went to 73.5. Let's see if that level holds or pushes back down. There's not a lot of inventory between 73 and 83. There is the 26th. Yeah, I have my all-time high at, I have a 7,005 3/4 adjusted all-time high, and then I've got a 7,013 3/4 all-time high from Globex October 29th. I'll post those levels in the room. Right? So much for the 10 a.m. reversal. The 10 a.m. reversal lasted for 2 minutes. Just enough to trap some people short at 70. See what I mean? You don't need to spend thousands of dollars on software. You don't need to spend thousands of dollars on trading rooms that don't teach you anything. Right? I've trained hundreds of traders over the years. Market makers, retail traders. Right? I've done it all. Right? And we're doing this because I like talking to people. I get bored. Right? And all my partners are dead or selling burritos because they just can't be bothered with the business anymore. So they took their money, they retired, and they opened up nice businesses. I don't want to run a taco stand. That's great. Sometimes you get that back, that reversal. Sometimes you don't. The thing is, I don't want to bias myself, right? So now look, we got a seller. We got a seller at 73. Let's see if we can take out that 68 half, right? And if we take out 68 half, we'll be looking for the 65s, okay? Let's see where the bid is now. Is that bid still there at 68 quarter half? There are a few bids there. Look at that candle walking away from 68 half. Check it out. There's a space between the bottom of those candles and the line I drew. What does that mean? That means that the market sees buyers here and tries to get them to come up and pay more. Why? Because that's how business works, right? If you see people are willing to pay a lot more for what you're selling, you can raise the price. Very simple, very simple, very simple. Okay? Good, good, good. And I wouldn't trade this right now because I see bids at 69. I see sellers at 72. Right? So this is not an A plus setup for me. See how slow it is? No business to be done. Just relax. Right? See, usually about 45 minutes after the open in the old days, the coffee cart would come by. We'd run our opening trades, and now we just kind of chill, relax, and wait for the next set of customers to come into the store. Right? Yep. Just make sure you get paid, Espil. If we take out that 69, you know what to do. Right? Good stuff, Rebel. I'm happy to help. Happy to help. Now, see, and this is what gets a lot of people is this chop. They don't know what's going on, so they go long, they go short, they go long, they go short. Don't get sucked into that. Don't get sucked into that. The guy who owns Citadel, he's already got a couple of dinosaur skeletons. You don't need to buy him another one. What did he pay $17 million for a dinosaur skeleton? He doesn't need any money. How do I manage my position size? I use risk. So, for example, sir, if I was long 20 contracts between 69 and 70, I'm always selling them out, right? So what I do is as soon as I go long, I put my sell orders in. If those sell orders do not get taken out, I start reducing my size automatically because I know I'm carrying too much inventory for the type of business that's happening at that point in time. Does that make sense? And if you are a size trader, I will run some clinics on trading size. I did it last year. We'll do it again. Right? I'd be happy to show you. And that goes for anybody in the room as well. Right? So my stop is always based on structure. So say I was long 10 contracts at 71. If it started to take out the bottom of these candles right here, I'd automatically start cutting contracts. Right? And my hard out would be here. So, and I would have sell orders. If I was long 71 on 10, I'd have my sell orders out. So as the market goes higher, it takes me out. If my sell orders do not get executed, I know I got to get out of the trade. Does that make sense? This is a little cost basis. You're right. Happy Go Leverage. This is a distribution cost basis. Right? That's a distribution cost basis. Now, if you can hold price steady, if enough customers come in, you can start lifting that offer. And the next level you're going to be looking at is 77 and 3/4 if we can take that high. Let's see what we can do here. Right? There is an untraded point of control here right at 78/4. Right? And where are the upper stops? That M high, there's a stop. I didn't think we'd get up here already today. But hey, it's a new year. Daddy paid off the credit card. Let's go. Right? So here are your upper stops. That's where they sold before. They'll sell there again. This market extremely mechanically, very, very, very precise. Right? So yeah, so sir, if I was long those 10 at 71, I'd be out of at least 8 of them here. Okay? Because at the highs, right, if I'm building a position to go long at the highs, which I never do, right, I am going to be selling so fast it'll make your head spin. Right? You don't need to ask me twice to sell. Right? You know, back in the days they'd be like, JJ, can I show you a bid? And by the time they say BI, I'm like, yeah, sold. But I didn't tell you how much I want. How much do you want? 20,000. Sold. Right? If you look at my Twitter profile, it'll say my location. My location is on the offer. Doesn't mean I'm a short seller. It means I'm selling from a long position. See you, Mike. Have a good one. We'll see you tomorrow. Oh, yeah, new boss. Yeah, you don't want to get caught trading at work. That is. They don't cotton to that very easily. Slow, creepy, trap your price action, eh? That's okay. It's a long trading day. Hey, nice work, Hex. Way to go. Way to go. We're creeping. We're creeping. Slowly creeping higher. Nice. Sometimes you got to wait a little bit for your setup, right? Let them run into some other sellers. There we go. Hey, Doc! How were your holidays? Long time no see. I was wondering where you were this morning. Good to see you, brother. Happy New Year. Okay, we've got a seller at 74. Once again, just like here, let's see if that bid is here, right? Oh, come on. See how the bids are here? Right above this cost basis. So there's a cost basis here. They're selling here for profit. If they have to put it on sale, it'll come back into this area here. Very simple. Good distribution, right? Got lots of volume up here, right? So we're distributing all the volume that we own underneath 53 up here. You know, it's okay to short backfills. Just don't get carried away. And if you get bad trade location, don't be afraid to admit you're wrong and scratch. There is no shame in scratching a trade, right? Admit you're wrong quickly, rip the bandage off, and save your money, right? Getting stopped out is a business expense. Just keep your expenses down. Be a smart business operator. See how we came down into cost basis under 71.5? Caught a bid, market's back up to 73 and 3/4. That's why you got to be careful shorting at the lows. Yeah, people are just starting to come back to work, right? After a nice break. Next week will be busier, right? As more people flow in. That Friday's catch mitt was beautiful. And you could tell lots of people are short underneath Friday's high. You know, it's been tested a couple of times. Okay, let's see if we can break 69.68, right? Or 68 and 3/4. Right? So if you had shorted 73, put your stop at 75, do a little covering here in the 70s, you know, that's fine. Right? But if we can't take out where that blue line is down here, right? If we can't take out this blue line, then you know that there's nothing for sale under here. They don't have to sell it, so they're going to lift price. And the thing is, it happens so quickly now, right? Look at the bottom of this candle. What a coincidence. Huh? What a coincidence that it stopped selling right here. That's where the bids are. Support, my friends, are from bids. What are bids? They are unfilled buy orders. Right? That's what creates support, are unfilled buy orders. Because the software will see that there's buyers, pretend this is a glass door, the selling software sees that and goes, oh, let's see if they'll pay more, and boom. Right? Because the people who own it underneath 60 are just gently selling here. They don't want to, when you're a size trader, you don't want to sell aggressively unless you have to. If the clients are coming into the store, if the customers are coming in, just gently sell. You don't want to scare them away, right? Remember Elmer Fudd? Be very, very careful. We're hunting rabbits, right? Or he would say wabbits, right? You don't want to scare the rabbits, right? Yes, the resting buy limit orders, Alexander. You can envision them. They've got their little pillows here, right? And they're having a little dirt nap here, and they're all waiting to be filled, right? Right? Those are resting orders, little pillows, right? They're having a little snooze. And as soon as you break 68 and 3/4, those buy orders will wake up. During the LBF, the offer lifts fast and holds above 10 seconds with follow through. Does it imply bids are stepping in? Yes. Generally, it does, Slippy D. Right? Generally, it does. But it all depends. Every situation is different. That's why we have to train ourselves to always do the same thing, and then we can learn how to adapt it, right? Yeah, there you go, Doc. All righty. Exactly. Wait for the big guys to pave the way, right? Just like in Montreal after a snowstorm, you wait for the plows to plow the street, right? Before you take your car out. Same thing. Right? If you lived in Montreal, you understand snow. Right? There we go. Nice work, S-Pill. Sell into that strength, brother. Right? Give them hell. There we go. You're getting filled. You're making money. Beautiful. Beautiful. Right? Nice. Let's see if we can tickle 77 and 3/4. And after that, I'll be looking for 83 and then 84 up here. The 83 is from this chart. There's 83. Where is it? 69.83. There. All right. So there we are. As you can see, ladies and gentlemen, right? All of the inventory, right? And if you don't know what inventory is, do yourself a favor and come into our trading room. All of the inventory is underneath us. We are now in distribution, right? Let's see if we get any resistance at 78/4 where that untraded point of control is. Oop. That's okay, Jam. That's okay. You made money, right? Where were you long? $72 to $77? It's a beautiful trade. Beautiful. Nice work, Alexander. Beautiful. Beautiful. You guys are killing it. That's what I like to see. Right? I love to see it. Okay. Now let's see if that bid can move up here. I'm just curious, right? Getting to know this new 2026 market. We're only a couple of days in. The next half-hour bar is going to open in 2 minutes and change. Right, so we'll see what happens. There you go, Jam. $652 a day keeps the doctor away. Beautiful. Beautiful. Now you're cooking with gas, right? Now don't go spending it all on some fancy stereo. That's my favorite line from Mr. Deeds. Or in your case, another lawnmower. But to be fair, you do make money when you buy those lawnmowers and flip them. All right, just passing time. So I want to thank everyone for joining us. Please come visit us if you want to learn how to do this and make a living without any double talk. Practical trading that you can actually make a living with. It will work with you. And that's tradingsyndicate.org. Thank you so much for being with us. Let's see what happens in C period. We're likely to have some single prints, right? So then you will know that there is a short position in 43 seconds when C period opens. Let's see where the shorts are trapped, right? Single prints to the upside are a short position, right? Thanks, Mr. Simpson. I'm not in Scotland, brother. I'm in Liverpool. I'm in Liverpool, the greatest city in the UK, by the way. Thanks, Jag. All right. 5, 4, 3, 2, 1. The next period opens. And there's our short position. Let's see if we backfill this area, right? We're going to come back, fill that. The space between there and there are where the shorts are trapped. Hey, Seymour Mahalo. Thanks, everyone. We'll see you tomorrow. Have a wonderful, wonderful trading day. And as always, don't take candy from strange market makers. Thank you, everyone. See you in a bit. Bye for now.